We cannot have them fixated on P&L. In the first 3 months, whilst they're training on the desk, they are all distraught because they're not achieving P&L perspectives. We just want them to experiment. During that phase, we have to ensure that their skill and learning and development gradient is moving northwards at a good slope, even if it's contrary to the equity curve. We can drop a trader in the first week when he's negative 500 on account because his routine sucks.
Alex, we've had some absolutely wild stories on our floors, and this one really does stand out. And it's a trader that went as far as a 75k negative account, a level that would, of course, end most careers pretty much instantly. Yet somehow, not only did this trader survive, but transformed it into pretty much a huge pivotal turning point in his career. Could we talk about how this happened? Why, as a firm, we backed him, especially when I would say, most, if not 99% of traders would have been cut at this point?
Thank you, Peter. I think there is so much to unpack with regards to this trader, the proprietary trading arm of the firm. And I think we would start from the perspective of a skill development and learning. And if you look at the remote funding trial industry as a whole, their majority of our traders, if not 99.9% of our traders that we have put live on the desk over the past couple of years, would have failed multiple of these remote funding trials, would have, if they ever passed one of them, they would have then failed in the live markets very fast. And so what this says to you is this disparity between remote funding trial companies making money on the front end through simulated earnings, through monthly fees, resets, and so forth. And now, don't get me wrong, I think there was a space. This industry is becoming more and more open. Before 20 years ago, you had to be on a prop firm in London and Frankfurt and Chicago, big servers, big infrastructure. And since the advance of technology, reduced latency, cloud computing, you are having a significantly bigger pool of people who have access to the markets, but not access to capital. So they certainly have served an important purpose. And what I think is exciting in this space is hopefully the evolution as the consumer or junior traders start becoming smarter on what type of companies they want to devote their skill intelligence towards. And we're in a space now where I think there's going to be rapid evolution in the remote space. They're going to be announcing something significant, the beginning of next year at Axia. But more importantly is these traders on maybe some of the traditional remote funding trial companies is once their model where they start making money on the back end, because that's where we make money. We make money on the back end if traders are making money in the live markets. And we need to ensure that our traders, the gradient of their skill curve is improving. So if all traditional measurements are measuring pure out P&L and performance and putting people live, and as they're all trying to attract or gain market share, they're giving, you can go live in 2 days or in 2 weeks. Now, as a professional firm in Axia that make money on the back end, we can't put our money into traders who are learning the markets in 2 weeks or in 2 days or in 1 month or 2 months. So we have a process, because this process is about skill accumulation. This process is about navigating different problem environments, navigating new opportunity cycles, navigating and interfacing themselves across these various regimes. And so a trader for us, and as I mentioned, 100% of our traders would fail most of these remote funding trials because we understand that during the evolution of a trader, during their development phase, their equity curve will be going in the opposite direction of what they're learning. And so we've got to cater, we've got to allow for enough time capital, learning capital, risk capital for them to accumulate these skills. We need to do it in the most efficient way. we need to ensure that by the time that they're ready, that we're not going to risk significant amounts on this trader, that he's ready to go live and to trade. But even during a simulated phase, we cannot have them fixated on P&L. We have to. I know you walk onto the floor and it's all about, and these traders in the first 3 months, whilst they're training on the desks, they are all distraught because they're not achieving P&L perspectives. We just want them to experiment. We want them deliberate experiment, deliberate planning. And so during that phase, we have to ensure that their skill and learning and development gradient is moving northwards at a good slope, even if it's contrary to the equity curve. And so with this trader that you spoke about, he would otherwise, if I were to even rewind a little bit further, the most we generally hold the trader offside on the professional trading desk is between 20 to 30,000 negative. We don't have these pseudo, you have a 100K account and essentially you only have a 2K account. So our traders have, they have the ammunition to have, a 4-figure day, a 5-figure day as they prove their consistency. But another very interesting aspect, that we take a very counter-cyclical approach to sizing. And what that counter-cyclical approach is, as long as the learning gradient is moving upwards, they could be at their weakest part. 8 months down the line, they could be on a negative 25K account, but they might have the biggest size that they've ever had. And the reason for that is because we feel that they're now ready with edge in the market, that they can identify opportunity sets, and then they know when to deploy capital. They just need to start cutting the fat, as we discussed in the last podcast. So with this trader, he was down, over the first year and a bit, and he was losing money, but he's also incredibly resourceful. And this is for one of the rare times where we've held a trader offside. And for us to hold a trader negative 75K account, he was creating good knowledge share amongst other junior traders. He was accumulating good knowledge, good skill sets, good understanding, good frameworks, good mental models, good methodologies, but he wasn't yet monetizing it. But this knowledge acquisition, this intelligence that he was gaining was not yet being monetized, but he was adding to the collective, and you could see he was understanding. But there are a few elements that are still missing from his game, and one of the elements was the pain of missing an opportunity. It's one of the aspects I love to see when a trader starts understanding the market. When he misses an opportunity that's in a sweet spot, I want to see the pain. And the reason I want to see that pain and that emotion is because that should generate a strong method of debriefing and reflection. And if he doesn't, that pain is not there, and he wasn't, the pain of missing an opportunity, and so that's what we needed. But still, he wanted to be a trader. He was resourceful by creating good relationships, but it was also how he started his game. And in the beginning, he wanted to be, a really purist technician. He enjoyed the work of the hero from Traders of Our Time, our book, as well as The Engineer. But that skill set is more challenging to acquire in the beginning. And because that skill set is more challenging to acquire, more challenging means more time, means more risk capital. And so as he was losing until he moved to Cyprus, and he was taken under the wings of the collector, and the collector was instrumental in navigating someone who had acquired a lot of knowledge of the market, acquired a lot of technical expertise, and acquired a lot of almost diplomacy with the risk team and the performance team to keep backing him. And he was committed at his desk. We can drop a trader in the first week when he's negative 500 on account because his routine sucks. Yeah. Whereas a trader who's committed, who's rocking up, who's there consistently, who's showing the effort, we'll hold them for longer. And we've known this for many years to really hold the committed trader, because we know it's just time that we can take the average. You can have your outliers who make money from day one and perform, and they've been performing for the last 15, 20 years. But that's not where we scale our professional trading part of the company. We need to take a lot of committed individuals with not very many skill sets, maybe just say an average person, how can we make them elite? Because that's our scalable business model. And so this individual, he then was mentored by the collector here in Cyprus, and the collector, said you need to take those low-lying fruit trades, and you need to acquire skill sets in those domains. And he was navigating these trades, and very quickly he started chipping away at his trading account. His size started increasing until literally in 1 month he cleared his trading account. And that's the asymmetry, that exponential aspect. I know, you sit on the floor that he trades. What have you noticed with regards to his growth by just witnessing the risk screen in his development?
For him, it's a pleasure to watch everybody trade, on our screens and especially on our floor. But to see I would say his knowledge acumen of the markets and how he can get very deep, and he's very good as well also with speaking to the grads and telling them about the trades coming up and the plans and everything else. And I get to really enjoy that side of things, seeing how that kind of knowledge, where you said he was very good at acquiring that kind of knowledge from various people that were around him, to then be able to also give that off onto the other traders. So when I do see him trade and I see his positions and when he's on a trade, you can almost feel the sense of that experience behind the trade, because we know the prep, we know because I can hear on the floor how we've been prepping or how everybody's been prepping and talk, and then to see that go into action, you can almost feel that experience coming through with his sizing and how he's approaching it. So it's very good to witness, and to be able to understand that learning curve is far more important in the long run than the P&L. And it's something that I go back to the grads and I tell them from day one, which is, as long as you come to the floor, and we spoke about this in the last podcast, which is, as long as you come to the floor with the dedication and the willingness to adapt and to grow, that's what's important. P&L will just be a secondary almost thing that's going to come along with, as long as you can keep to those two things, and as well as keep showing up like this trader has been doing. So it's just it's great to be able to see that from that ground up all the way to where he is now and where he's trading now, and it's always exciting to watch. I mean, how do you feel that moments like this can reshape a trader's identity and also give the new traders that are coming onto the floor that what they can actually particularly learn from that kind of journey? How can we almost sort of shape them so they can really, it's one thing that I always want to try and get to them and to get through to them is to work. It's pure process for me, and then that P&L would come through. How would you explain that kind of that journey?
Yeah, I mean, with regards to this junior trader that we're speaking about, who was down negative 75K, and literally in the space of a month and a half, is now flat, starting to withdraw money from his trading account. And his journey is very similar to the Sphinx in the book Traders of Our Time. It took him no plan B. I think it took him over 7 years to be profitable. But you mentioned a few elements there with regards to what's expected on the desk. And again, I'll just go back. What's expected on the desk is learning performance, is acquiring knowledge, connecting into the intelligence field of the collective, understanding where opportunities are, where instead of you going down your own rabbit hole, having those conversations, creating those meaningful interactions with senior traders, being on inside the Axia learning portal and its technology base. And a trader, we don't as a firm want to be having multiple traders going down even more than 10K. We want them, if we feel our simulated environment manufactures enough pressure that the transition is smooth into the live environment. They've witnessed a couple of cycles in that simulated environment. We have some our proprietary technology that we're releasing on how we can reduce the latency of experiencing multiple cycles. We have to move aggressively and fast in that space, so we can back traders with even greater conviction. It's one of the reasons why the London prop industry collapsed over the last decade, is simply because graduate programs collapsed because it was too expensive to get a trade alive. So all what started happening was, prop firms were nicking other prop traders from other firms with better deals, and then the industry is just kind of eating itself. And so we are having to pave a new way of developing traders now. The funding trial remote industry is part of that solution, but I think it's going to go through a 180-degree twist and turn, and hopefully we will be instrumental in changing that space, and instrumental in the space because we're concerned if the trader makes money, as a firm we make money. If the trader doesn't make money, because the 95% or 98 or 99% of the models out there, if a trader doesn't make money, the remote prop firm makes a lot of money still. And that needs to shift, and the traders out there are going to get smarter. Those who don't have the capital to back themselves, and until they understand, until the space understands that we are in the space to develop traders to have long careers. Because if you are just trading to pass a trial or to game a trial, by the time you go live, you've never acquired the skill to navigate markets, because you're acquiring the skill to pass a trial. And those are two distinctly different elements. So on the desk, but it's it's creating all this interest around the world, which is incredibly exciting. There just needs to be evolution and evolution in these models, and it will happen because they're going to get smarter. But until a firm is interested in making money in the back end, that's what's going to be important. And so, any of those who are watching trials, I'd love to, in the comments side, what do you expect when you being back? Because what I expect to observe from junior traders is, do they have enough time? Compressed time too. Do they have enough time to acquire a skill? To develop multiple skills, to develop skills across the different environment regimes, and so with this trader, seeing him now fulfill his potential, although a little bit long and dated, is just, well, firstly, it's a breath for us that, okay, we're not taking a 75 to 100K hit on this trader, but we have a trader who stuck it out, who's believed in himself, who has been resourceful in making sure that he survives almost every single month, almost on his deathbed of being stopped out, proving to us that he's worth backing. And so that's a special type of story. And to your point, when other traders join the firm and they know someone has done that, then it's just going to give them and understand that there's the reality of the game. And if you really want it, regardless of what firm you're at, you'll make it work.
Yeah.
And
as sorry to step in there as well, his relentlessness, should I say, is something for me that I think is very aspiring to all the graduates to watch that. And speaking about the industry and the remote funding trials and everything else, it's almost reminiscent of kind of like the crypto space as well for me. I can now just kind of put the connections there where the Bitcoin and crypto, everything kind of all came out and it was all over the place, but now suddenly it's all getting regulated and it's all coming, you've got the ETFs and you've got that kind of thing. It's like, it's exciting to see that remote space from a perspective of it's becoming more accessible, like you say, and it's allowing people to partake and to learn about the interest of the markets like I once did. But now, and I think I'm seeing it more so when I'm interviewing grads who are coming onto the floor that are looking to come and see, they're trying them, and like you're saying, they're learning to gamify a stage process as opposed to learning how to have a career. And I think that's the defining factor. And yeah, like we said, we've got lots to talk about on another day, and we've got lots of exciting things. And I think it's hugely aspirational, even for me, to watch how you and then the whole firm is always trying to be at that forefront of paving a way because somebody needs to do it. And I think, again, I always spoke many times on different podcasts about that toxicity that YouTube can bring, and the Lambos and the things because of that, prop space and the affiliate links and everything else that they do and they promote. Whereas we have a model, we know that our goal is to train traders into titans. Saying that I've had with me for a number of years now, and to be able to now put that onto a remote level and use our skills and 2 decades of experience of making these traders go live and helping them go live from nothing, from zero accounts to flat accounts to 7 figures, 8 figures. Being able to then expand that, I think, is going to be hugely exciting, and I'm very excited to watch the space.
Yeah, we're incredibly excited to scale the next generation of traders, have evaluation technologies that are going to rapidly give more people, the right people, access to prove themselves. And this trader, he needed just a little bit more time to find himself, his identity. And that's what's incredibly exciting.
Yeah, amazing.